Hi, this is Mac with PriceActionTradingSystem.com, and this is our chart lesson for Friday, April the 27th. This is going to be a quick one today. Um, I waited kind of late today to do the chart lesson, and I can't connect to AMP this afternoon, so I'm assuming that because it's Friday, they're probably doing some server work or something. But I can only get my chart to load as far as where I stopped trading this morning around a little bit before lunchtime. So as you can see, the trades I marked, and these are the four trades that I took. Um, and so this is where I made all my money today. So this will be really clear as to what I was looking at. So this is going to be a quick chart lesson. But the overnight trend was up. We had the break here early before the regular open. Then it moved to a new high. Then we trended down. We had the trend line break, moved to a new low, and then the trend started up. And prices actually ended up going back up and testing this high today, and then and selling back off and closing right down here in this same area. So, uh, once we kind of went into this around 10 o'clock, and about 11 o'clock we were still in it. That's when I'd had enough. And that's pretty much when I called it a day. I was hoping that we might get a failed break lower here and prices may go higher. And that's kind of what ended up happening. We broke out of this and went higher. But with it being Friday, I had some other things I needed to do, and I pretty much called it a day after this trade right here. So, um, but anyway, if you were using your trend lines, it was pretty clear when the trend was changing. These trend lines up through here, we broke it, went to a new high, and a lot of times, if you want, you can almost use um, the the EMA to give you a clue as to when there's a trend line break because um, or to give you a clue when the prices are changing, because once you see we got below it, then we couldn't get back above it, and then once we got above it, we stay above it. So the EMA is a second clue. If you can't find your trend lines, try to use your EMA, and if the EMA is flat, like it's starting to get right in here, well then that's a good clue that the market is not trending any longer. So like right here, you see when we went into this range over here, look how flat the EMA got. And that's a good sign that the market's not trending and that we're ranging. So always, and this is a 21 bar EMA that I use here. Um, a lot of people ask me about it. 20, 21 bar, you get about the same thing, but I like to use a 21 bar. And the reason I like a 21 bar, and don't take this the wrong way, because I'm not uh, one that really follows I'm not one that really follows. Sorry, I had an interruption there, but I'm not one that really follows the Fibonacci numbers. But there is something to them, and if you put them on your chart, you'll see prices react there. If for no other reason, it's probably because enough people believe in them and trade them that they actually become a self-fulfilling prophecy, so to speak. So anyway, that's why I like a 21, because it is a nice uh, Fibonacci number, and it does seem to give you the best location for holding the prices and giving you a clue on when prices are turning. But again, you've got your three short-term trends. The overall day was pretty much a trading range day, kind of a boring, slow day, typical kind of Friday that you might expect. But let's talk about the trades. We had the trend line break of this main trend line from the overnight, went to a new high and started selling off. So hopefully you drew your trend line off those first couple of swings right there, and that should have got you into this trade right here. This was you really should have had, as you can see, you kind of got a double bottom across here, depending on how you drew it. It's still all right in there. So this is a breakout, a pullback that touched the trend line, uh, and then we broke lower again and then tried to go higher. So that's a second entry long right there with the former trend that probably tricked a lot of people right after the open, and prices immediately turned and sold off. And so going short right there on this breakout pullback short with this failed second entry long was a great setup. And any runners would have easily been safe, and you could have ridden them all the way down. So that's where I made most of my money for the day off that trade. And you just got a second shot at it right here. But even though this was the first trend line break, And even though this is a new low here, this is still a two-legged pullback to the EMA, and it's the first break of the trend line, so we're still looking for shorts. And that was another nice sell-off. And again, any runners were good for several points right there. So on these two trades right here that were very simple, easy setups that almost anybody should be able to find, um, was your chance to make some good money today. And if you didn't catch one of those, then it got really slow and boring. We had a nice double bottom down here. It's really a double bottom on a failed. It's two tries to go lower below that. They failed after the trend line break. And look how far away prices are from the EMA. Anybody that got short right there, and you can see that tick lower. I guarantee there's no telling how many people got trapped short right there, and then prices exploded back up to the EMA. And so that was a nice ride back up off this kind of triple bottom, but definitely a double bottom low right there. You can see it. And so that was another great quick, no runners this time, but it was a quick scalp, and it was just too much congestion here. Most of the bars are forming below the EMA, so even though you got a double bottom here with a chance to go long, odds are that's going to fail and turn back down, and you can see that's exactly what happened. I think a scalp would have worked here, but it's just not a good setup. I didn't mark it. I don't recommend it. And then you had another little range right over here, and you see how they had your lows and your highs would have been long up in there. But this is a failed break lower. It's two tries to go lower. It's a second entry long off the EMA, off a pullback to the EMA, off a pullback to the trend line. If you drew your line off these lows here, you can easily see that. So another chance just to get long right there during a pullback, and that was another easy scalp. And that was pretty much it for the day. And you can see where I turned my chart off around noontime here, and for some reason I can't get it to load past that. So nothing up in here worth even considering. So no more trades in there. But that was the 4 trades I took for today. That's what I saw. And these two right here really made me the money. These two right here just basically made me a scalp. I got a little more than a scalp out of this because my runners survived for a little while, and I actually exited off that failed break when prices came back down there. So I got out fairly close to the highs on this move right here. But that was it for me today. But somebody, I'm always getting asked about second entries, and I made a couple of videos on second entries, but let me just go over second entries with you real quick. There's not a lot of them on this chart right here today. Let me go back over here and just see if I can find. Here's a few right here. What we're doing is when prices are working higher, every time you get a new high, you start your count over. So you're going higher here. You got a new high right here. So prices start to pull back. There's your first entry. There, all we have was a first entry. So prices are working higher again. There's your new high. There's your pullback. There's the first bar that ticked higher than any previous bar. So there's your first entry after this new high. Again, every time you get a new high, your count's 0. You pull back. First entry, first attempt to go higher. So that's your first entry long, or and another pullback, and then there's your second attempt to go higher without having made a new high yet, in other words. So there's your second entry long right there, and then prices run to a new high, and you see how that would have worked. Then there's another new high, so now the count's 0 again. Prices start pulling back. Here's the first bar where any prices could go higher, so there's your first entry long, and that's all you had on that trade. You got a new high right here. Prices start going back. They go higher. They break higher. There's your first entry. New high, counts 0, pull back, first entry, new high, so counts 0, first entry. There's your second entry right there. This one failed, and prices turn lower. So again, new high, so the count 0, there's your pullback. Your first bar to go higher than any previous bar was right here. There's your first entry. You didn't make a new high, so you know the count is 1 now. Prices are coming lower. There's your first bar that ticked higher or broke higher than any previous bar after the first entry. So there's your second entry. So now the count's 2. Prices are coming lower. There's your next one. That's a third entry long off that high right there. But now prices are making new lows. So You can actually have the count going in both ways, but when this one failed, now you're counting off the lows. So counts, all right, let's say right here, you got a new low, count 0, prices pull back, there's your first entry short, got a new low, count 0, prices pull back, there's your first entry short, prices go higher, and then there's your second entry short, and boom, look how good a move that was. So again, when prices are coming down, every time you get a new low, counts 0 right there. Pulling back, pulling back, pulling back. There's your first bar to go lower. So that's a first entry short. And you didn't get a second entry on that one. Prices just rocketed on down. There's your new low right there, though. Prices pull back, start lower. There's your first entry short. That's all you get. You got a new low, so count 0. Pull back, first entry below. First bar to break below another bar. First entry counts 0. First entry short, there's, because that's your first bar to break lower. Pull back, there's your second price bar. So now you got a failed second entry, and then prices are racing to the upside. So now we're counting in the other direction. So that's how second entries work. People think that they're really hard to describe in writing, and you can read the writing over and over, and if you don't quite know what they are, you can read it and interpret it different ways. And people try to make them into this magic thing. They work great, and they really are. Not many people understand them or know about them, but they're just so simple, and people try to make them into something really, really difficult because they think there's some magical pattern, but they're not. All we're doing is counting every time prices making, if we're counting to the downside, every time prices make a new low, your count starts over to 0, and then we're just looking for bars that break lower. So see how this, none of these bars broke lower than the previous bar. There's the first bar that broke lower than any previous bar after making this new low. So that's your first entry short. And then you never got a second entry because you got a new low. So now the count's 0 right here. We pull back. There's the first move lower. So there's your first entry short, but all of a sudden now we got another new low. So the count's 0 again. There's your pullback. First entry bar to go lower. So now you got your first entry short again. Now the count's 0. But then we reverse and start going the other way. But let's just go ahead and look at this again. The count's 0. Prices start pulling back. There's your first bar right here that ticked below any previous bar. So that's your first entry. All right, now we got the counts 1. Then we turn down here, counts 2. We're still going higher. Turn down here, counts 3. Turn down right there, counts 4. Turn down right there, counts 5. But by that time now we don't care about the turns down. We're looking to the upside. And we should be counting new highs and then looking for second entry longs. So that's what this is all about. And really all they are is we're looking for two legs. The market always moves in twos, and you can see that right here. There's one leg up, pull back, then a second leg up, and then try to go lower again. And sometimes there's multiple legs in the leg. So, but the whole gist of second entries is we're trying to count. The market moves in twos, so when you get a two-legged move, you usually get another correction in the other way. Now here's a good example of it here. You got a new low, you got one leg up, you got a pullback. You can't hardly see this in here because this is a, if you went to a smaller chart, you'd clearly see a leg up, a pullback, another leg up, and then you see another pullback and a third leg up right there actually. But this is a nice, if you measure this leg from here to here, let me just show you real quick. Got a little time today. We're only about 13 minutes. There's leg 1, then you had a pullback, and then there's leg 2, almost a perfect measured move. And so we're always looking for legs. And then if you look over here on the bigger picture, and they're not always exactly the same size. You got a leg down right there, and then you got a second leg that came up short. And that's a good clue that prices are going to try to rally, and they did, because prices couldn't make a measured leg. So that means the market's stronger than you're expecting. Here's this leg, and you got to pull back, and then there's another leg right there. This one came up short, but prices still went higher there. These are not real clear legs, but they're in there. And really what I think it is, I think you have one leg right here, and then this pullback, and then this leg right here. You see that's a perfect measured leg. So there's your two legs. And there just happen to be two swings or so in this first leg. But again, look at that. There's your leg, first leg. There's your correction, and then you measure your second leg and look, it was almost to the tick. So anyway, hopefully that kind of clarifies second entries, and they're not very hard at all. It just takes a little practice. And here's another example right here. Prices made a new high. Again, every time we're going up now, so every time prices make a new high, we're starting the count over. So here's your new high, count 0, prices start pulling back. There's the first bar that could tick higher than any previous bar. So there's your first entry. Prices are ticking back again, or they're pulling back again. And then there's the second time a bar could go higher than a previous one. So there's your second entry. And then prices pull back. Actually, we made a new high right there. That's a little bit higher than that one. So that's good enough to start the count over. 0. There's your first entry right there, and it failed, and then prices sold off. And then now you got a new low right here. So prices are going back, and they start to come down. There's your first entry. This is 0 right here. Prices start pulling back. There's your first move lower than any previous bar, first entry. Then they pull back again, and there's the second entry right there. And look how good that entry was. Boom, off to the races. So hopefully that's clear to everybody. I'm going to wrap it up. It's Friday. Have a great weekend. This is Mac with PriceActionTradingSystem.com, and we'll see you next week.